Welcome to our Global Employer Services Update for the month of December 2024. In this video, we'll cover significant updates, including new wage theft laws, notable cases, ATO data matching, sham contracting, updates for NFPs, and some global tax considerations. Let's dive into the key developments and their implications for employers and employees. While the purpose of this update is to cover updates during the month of December, it would be remiss to not mention the introduction of wage theft laws from the 1st of January 2025. From the 1st of January 2025, intentional underpayment of wages or entitlements can be a criminal offence. This does not include honest mistakes. An employer may commit a criminal offence where they were required to pay an amount to an employee such as wages or paid leave entitlements, or on behalf of the employee, or for their benefit such as superannuation or a salary sacrifice arrangement. An employer can also commit an offence where they have intentionally done something that results in those amounts not being paid on or before the day they were due. This could be relevant to late superannuation payments. One of Australia's leading supermarket chains, Coles, has recently agreed to repay over $1.5 million in unpaid long service leave entitlements. These entitlements cover almost 10,700 current and former employees. This underpayment stemmed from an investigation by NSIA Industrial Relations, which identified Coles miscalculated the entitlements by excluding allowances and bonuses from the ordinary pay calculations. This is not an isolated incident for Coles, having had a similar outcome for Victorian-based employees, although in this instance it was attributable to an enterprise agreement which incorrectly froze the long service leave accruals during periods of unpaid leave, which conflicted with state requirements. It is important for employers to regularly review their long service leave entitlement calculations and accruals, as well as understand the entitlements under both the agreement as well as local state territory obligations. Former head of mergers and acquisitions, Gillian Wilson, has taken federal circuit court action against Amalgamated Australian Investment Group for allegedly keeping her on a sham contract, underpaying superannuation, and unlawfully dismissing her based on vague claims she wasn't doing enough work. Ms. Wilson claimed she was paid $380,000 a year to act as head of mergers and acquisitions for both AIG and its associated fintech company, Halo Technologies. Despite her repeated requests for an employment contract, Ms. Wilson claimed she never received one. The case is set for directions on the 28th of January, 2025. The ATO will hand over single-touch payroll data to the government's Employment Services Program to improve its administration, increasing oversight of job seekers' mutual obligations and verifying job provider claims before releasing public funds. The data would also be used to assess the eligibility of businesses who hire job seekers on Workforce Australia for wage subsidies, according to a Gazette notice this week issued by the Department of Employment and Workplace Relations and the ATO. This being said, they have advised that no consequences will flow on as a result at this stage, with the activities and operations of providers, employers and participants to continue as normal during the initial data share. Given the impact on other obligations, even at an employee level, employers should ensure the accuracy of the STP data shared to the ATO. From January 2025, West Australian employers can request employees to work on public holidays if reasonable. However, employees can refuse unreasonable requests. Employers must stay updated on pay requirements to avoid penalties, reputational damage, and maintain compliance with new regulations. The ATO's Next 5000 report targets wealthy private structures for compliance reviews. Focus areas include FBT, asset use, and generous incentives. Entities with rapid growth or cross-border transactions may face audits, emphasizing the need for thorough compliance. There was an interesting case centered around gifting. In Chong v FCT, the taxpayer received a gift from his sister, a prominent businesswoman in Vanuatu. The Federal Commissioner of Taxation sought to categorize this as income. The amounts were provided to the taxpayer in trust by his sister to use as capital to pursue investment interests in Australia on behalf of the family. The ATO alleged the funds were taxable income on the assumption the taxpayer was a business owner of the Vanuatu business, where remuneration for services rendered were disguised as rent for Australian properties and were ex gratia payments for his past contributions. Justice Logan delivered a decisive rebuke to the ATO's claims ruling. The funds were not taxable income, but in fact, voluntary gifts of capital. Familial bonds and trust underpinning the transactions were emphasized in the judgment. Not-for-profit entities should review the ATO's latest checklist on PAYG withholding, superannuation, and FBT. The guidance emphasizes obligations when engaging volunteers, ensuring compliance with employment taxes, and avoiding potential legal issues. The ATO is scrutinizing incorrect tax residency claims, finding some private group taxpayers lodging as non-residents. Employers must ensure accurate residency status for employees on secondments or assignments to meet tax obligations and avoid penalties. A new double tax agreement between Portugal and Australia has been announced. Employers should assess the impact on employees working temporarily in Portugal, ensuring compliance with international tax obligations and optimizing working arrangements. Thank you for joining our update for the month of December 2024. We can see a lot of activity in the wage compliance space, and we encourage all employers to actively look at their level of compliance. As always, please feel free to connect with your local RSM contact, being myself and Peter in Melbourne, Gina and Neve in Perth, and Jason in Sydney.